Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, it's Steve and Joe from Fresh Agenda, Everegg's Global Insights team. And Steve, we're here from a hotel lobby in Amsterdam, recording this under difficult situation. Here to talk about the latest GDT, which was very interesting. Bit of a recap on ADPI last week in Chicago and, of course, chat of the week.
Okay, let's get going with GDT results. I just want a bit of context first, Joe, with this one that we see on this chart. These are the monthly volume sweat out. We're at almost the very bottom end of the seasonal cycle. That's to bear in mind. Strong off GDT sales, mostly Southeast Asia, the biggest surges come. But when you look at the results, we see a pretty strong whole milk powder result based on that seasonality. Regular C2 went up 89%, way ahead of pre-event futures. But what pulled the average for whole milk powder down was a weaker European price. Skim milk powder up 3% in median heat. Again, the EU product was mixed. Overall, they had small losses. New Zealand butter. Fats were very strong here. Both fats up by similar percentages, which kept that discount of AMF about where it was. It kept it steady. But we saw here New Zealand butter up 5.5%. Record prices for C2, C3 on the GDT platform, Joe. So quite stunning. And then cheddar, I've got a lot to say here, but cheddar up 12%, young cheddar in C2 up 13%. Takes it up well above the European benchmark. And the only other highlight is that European mozzarella went down a bit over 1%. A lot of action.
Yeah, so strong demand pretty much across the board, apart from skim milk powder there, Steve. Very strong demand for butter and also whole milk powder well above average. Starting to see AMF recover in terms of demand, and we've seen that in the price. Involvement for Chinese buyers in whole milk powder fell below 40% and lower tonnage. So, yeah, it wasn't the Chinese buyers that were pushing these prices high, Steve.
I think a lot of the action came from Southeast Asia. You can see that surge in first three contracts there. Something we're missing here, the New Zealand weather isn't particularly bad. There isn't a great deal of shortage of product. It's one of those things. So you just got a low volume offered and people come with similar intent as what they had before, and we see a strong result. Over to butter. Again, strong lift across contracts. The EU market's been a little weaker, Joe. The weekly rundown this week talked about that. And EU prices on GDT slightly down in keeping with that market. So again, that clamour for available New Zealand product was quite strong. Skim milk powder pushed a little higher across the board, but where does it leave us in comparison, Joe, to the other regions?
Yeah, look, New Zealand prices have lifted further higher than the EU product, on average $364 a tonne higher than the comparable product from Arla and Solarex. So there's a big gap opening up there with this latest auction.
So in skim milk powder, a small lift in Chinese involvement, but Southeast Asian buyers did most of the work here, lifting that volume again. And they've been pretty subdued lately. You can see where they're coming from there, pretty low involvement in recent events. So that's a little turnaround.
The whole milk powder price premium continued to grow with this latest event, Steve. So you can see that orange line well above the comparable skim milk powder and AMF products, analog products.
And looking at where this leaves cheese, which is pretty interesting. So those top lines reflect last week's spot quote in Europe and the GDT result from this event. The EU market is therefore steady, down a little. That black line is a fair value computation based on steady fat and protein values from the European market. So it's a reasonable indicator of, the fair value for the product. This week, Joe, CME prices moved higher. So brought that gap a little closer. It's still quite interesting.
And just where this leaves us in terms of GDT versus the futures, New Zealand has come back to the pack a little in skim milk powder, but we're still seeing that big gap opening up in those early months before those lines sort of come together.
Pretty strong GDT result. Let's top that.
And for butter, GDT results are now very close to EU pricing, which is probably not what we would have expected to see. Futures, as you said, didn't quite get up to that before the event, and CME well down, as we know, on very, very ample supplies of cream and butter in the US.
And a last look on the GDT relativities. This is something we take from a Chinese analysis we have, taking a milk cost in China based on farm gate average prices, overlaying what we think are notional costs of manufacturing, just comparing that to the landed cost of imports, and that is widened considerably in the last few events. That's quite interesting as to whether that hold, but we know that's not a price-sensitive market. Joe, US trade came out this morning.
Yeah, some US trade numbers. The volumes were up 6% in March 25, so we're continuing to see pretty strong performance in US exports. That's in milk solids equivalent terms. Skim milk powder was up 2% year on year, with a big jump in Mexico trade. Obviously, a lot of product moving ahead of what might come in terms of tariffs. Cheese fell less than 1%. But there was a big gain in Japan, Mexico, which is obviously a very important market for the US slowing. The price advantage has been there for a while for cheese, but it hasn't shown up in this data as yet. Butter trade was up 170%, but year on year, it's less than 4,000 tonnes added, and that was mostly to Canada. Small changes in whey product trade as well.
Okay, we were at the ADPI event last week, and rather than take up a lot of time here, we've got a couple of snapshots of what the vibe was from that. And we broke this, Joe, into optimists and pessimists.
Which one do you want to be?
I'll be the pessimist. You're an optimistic girl, so you go for that one.
Okay, well, the optimists that we talked to at ADPI last week thought there was just too much economic risk for this continuing impasse in trade between China and the US, obviously with tariffs well above 100%. Traders literally stopped. Both the economies of the US and China too damaged by the loss of trade in very sensitive areas, and we're starting to get a lot of talk about carve-outs on both sides for some of the more critical traded goods. People were thinking one or both will back down and that deals will be done to minimise the other reciprocal tariffs that were announced on Liberation Day on the 2nd of April, and that perhaps the 90-day pause would just kind of come and go without being acknowledged by the administration, and that 10% baseline tariff might be there for some time. But what were the pessimists saying, Steve?
Others saying China's playing a long game here and was quite ready for this for some time, and now it's got an additional Chinese economy is quite weak. It's been weak for some time, but now it can point the blame to the US for some of that damage. But on the other side, the role of tariffs as a lever, it's core belief of this US administration. That isn't going to go away quickly. Obviously much of general trade has halted between the two major players. This is giving rise to a worsening tangle of global shipping. And, player stats thrown around, including a report from Drury, the shipping consultants said this is much worse than COVID and will take a lot more time to unravel. I guess the other worrying thing for the US is there's, the volatility in policy settings and this, one term to the other. We have a totally different policy on trade is bringing a loss of trust in the US as an origin in terms of its reliability as a supplier. So that's something that's creeping into discussions we're in Europe at the moment, and that's been confirmed, with feedback we've got from the client here. So that's it's an interesting wrap on. I think we'll end up somewhere in the middle, Joe. The other part of the vibe was just generally what's going on in the market, and I suppose take us to demand first. Let's take turns down this list, shall we?
Yep, sure. So definite headwinds for cheese. And we've seen this in the data for some time, but it was certainly confirmed with the discussions that we had at ADPI last week that cheese demand is very soft. Food service is really terrible. Retail butter has been okay, but not spectacular. And high pro remains strong, but with easing prices, just given what's happening with the whey complex and a bit more supply coming on in the next couple of months with this new capacity. The big uncertainty continues to be the GLP-1 drugs, Ozempic, and what that's actually doing for demand, particularly for butter and cheese, although seen as very positive for protein, and what's happening with the economy. And the tariff issues are part of that as well, Steve. Over to production for you.
Improving milk output in central regions, filling new cheese plants. But I guess something the Intel coming back suggests we're probably only about halfway through that journey of filling that new capacity, and we'll get there sometime in Q4. So that's possibly supportive in the short term, because we still are hearing of, as always, you get together this talk of production problems, factory shutdowns, periods of time, etc. That's still out there. The butterfat glut, certainly not done yet. And Joe, I think an interesting thing we talked about a bit, the new economics of milk production, with there may be falling milk over feed cost margins. There's some limits on numbers with young stock being so expensive, but the importance of beef income, cull cows and selling off young stock, it's just adding a layer of income that's keeping producers in good cash flow. We see that in Europe, and I think that's a feature of you mightn't see a growth in herd, but you don't see a lot of milk. And the other uncertainty is bird flu over. I mean, we really didn't hear much talk about that, but it's kind of gone away, flown away, you could say.
Tariff impacts, I mean, we talked a bit about these, but basically whey permit lactose exports to China have been stopped. Dry whey and high pro exports will be reshuffling to other markets, a bit of jockeying between EU and the US, putting some of that product into Southeast Asian markets. Obviously, the worsening impact on shipping we've already mentioned. The uncertainties are how long and how severe these tariffs get, and the impact on inbound tariffs on domestic demand from any retaliation that might come down the pipe if we go back to this after this 90-day pause.
In terms of export prospects, with the US having very big price advantages in butter and cheese, there's lots of talk about business being written. Question is, how much can be won? That's a good wrap up of what we talked about. Joe, let's wind this up with your chart of the week.
Yeah, and we're staying in the US, Steve. Our colleague Phil Plord pulled out this sales information for McDonald's in the US, same-store sales in Q1 2025, worsening year on year. I think the number was around 3% or so down. And when you, as Phil says, when you take into account menu price inflation, that means that volume is well down beyond that 3 and a bit percent, attributed to lower footfall in terms of restaurant traffic. So just less people going out to eat at McDonald's. And this has been a common theme along a lot of the QSR results that we've seen come out in the last little while. The big exception being Taco Bell, but just another indicator, Steve, of the problems with demand, particularly for cheese and butter in food service.
Okay, that's a wrap. We'll be back next week in a more stable environment and better setting for recording. So thanks for watching. We'll see you then.